everyone, today we will talk about ABC Learning, equal one of the biggest childcare provider in Australia. It was founded by Eddie Grove and his wife in Queensland in 1988. Growing very fast, the company listed in the Australian Stock Exchange in 2001, and it continued to grow with many new centers providing care to many children. But in 2008, the company experienced a significant decrease in the share price. It led to the company collapse with insolvency in November 2008. The company was concluded that it was insolvent by at least first half of the year 2008 and recommend the creditor to vote for the liquidation. In this video, we will discuss some ethical issues facing accounting professionals and auditor leading to the collapse of ABC Learning include the auditor independent, internal control, auditor technical skill, audit committee, and duty to report.
Auditors' independence. Auditors are legally required to be independent from any entity that they audit to ensure that they act in the best interest of the public. If an external auditor is not completely independent, it could result in financial reports being unreliable and irrelevant, which will result in users being unable to rely on financial reports for decision making. The collapse of ABC Learning in 2007 has been investigated by ASIC, who reached the conclusion that during the audit of the 2007 financial report, Mr. Green's lack of independence and concern for the general public led to this collapse. According to ASIC's investigation, Mr. Green had failed to perform adequately and properly his duties as an auditor. Prior to Mr. Green's employment as the auditor for ABC, Russell Brown was employed as the primary auditor. Mr. Brown previously audited Mr. Grove's private company. Having a previous relationship with the auditor breached Mr. Brown's independence. This threat may have played a bigger part in the collapse of ABC than expected. However, due to the fact that Mr. Green was the sole scapegoat, it is quite hard to say how much of a role this threat played.
Hi, I'm Nga. I will talk about the internal control part relating to the ABC Learning. The objective of internal control is to safeguard the entity purpose, providing reliable financial reporting and improve the effectiveness of the procedure. To achieve these goals, an auditor would determine which control to investigate and create the assurances. For either an internal or external control, there are three types of control to limit the financial fraud include entity level, transaction level, and documentation. On it to evaluate the risk assessment and minimize the influence of the opportunity behaviors. The entity level control run an understanding to establish a level of professional skepticism and the risks that may hide in the audit process. The controls are internally generated and re-emphasized by the management to deliver an optimal level of productivity. The company ABC Learning had failed to the elements of communication and the enforcement of integrity and ethical value. The company have the annual report in 2007 stating that its profits were $37.1 billion, but the operating cash flow were minus $19.8 million. It led to the unqualified audit report in ABC Learning. Moreover, the ABC Learning financial report did not take into the consideration of the intangible assets and the goodwill. Also, from June to December 2007, the non-current liability were inconsistent. The management should have provided internal control to add the issue with the assistance of the audit assistant. This assistant would review the overstatement and the understatement, which helpful for the both internal and the user of the report information. Hello, my name is Nga. I will talk about the auditor technical skill of ABC Learning. The auditor must provide the technical skill to detect and prevent the existence of fraud in an entity In doing so, sufficient audit evidence must be acquired to review their client and pay their financial credibility to be true and fair when delivered to the internal user. There are three types of sufficient appropriate evidence: sufficiently related to the quantity of evidence, appropriateness related to the quality of evidence, and audit risk determine that evidence is required. This evidence is required to provide an independent auditor opinion in general purpose financial report. A type of evidence that auditor can use is through internal confirmation. The collapse of IBC learning was due to a qualified audit report by former auditor Peter Green. If Green provided supported audit evidence that fee from the regional management company are classified under revenue, this would allow IBC learning revenue income to be covered. But in fact, Green procedure led to an overstatement. The possibilities of audit evidence use various features to determine the legitimacy of information. The auditor will observe, inquire, and recalculate the information. ABC Learning Independent Auditor Green should have relied on tests of detailed transactions for material misstatement and tests on detailed parent like bank confirmation letter for financial information. The consequence of not gathering appropriate evidence of ABC learning rely on Green technical skill to detect fraud occurring and risk on insolvent have arrived.
Hi, my name is Christian. I'll be talking about audit committees and the duty to report. So the audit committee have strong communication skills to interact with the management and have knowledge of current regulations and understanding of the financial reports. Members should have standard industry experience and the ability to challenge auditors and the board of directors. They are charged with overseeing internal and external audit processes whilst evaluating if the information is obtained is true and fair. Furthermore, they should be independent from management and avoid conflicts of interest to provide information to external auditors so that they are able to form an honest opinion. The ABC Learning Audit Committee consists of 4 senior management members who were appointed by the board. In the 2007 and 2008 financial period, the committee held 4 meetings and reviewed specific skill half financial statements and other reports the company required. The role of the meeting is to provide an understanding about ABC Learning's financial framework and activities. Assessing the financial statements and discovering issues that may affect the entity is when ABC Learning's audit committee sought assurance from senior management in regarding particular issues that were discovered while assessing the financial statements. For instance, a refinancing of $1.1 billion from borrowing change into non-current liabilities should have been investigated. The duty to report is to underline the conflict of interest and disclosure information to determine if fraud is evident. This is due to corporate opportunity related to parties for financial benefit. The prevention of insolvent trading is an additional reason for the duty to report. After the release of 2008 financial results, it was noticeable that ABC Learning may become insolvent and unable to repay their debts. If shareholders were unaware, Groves should have reported that his brother-in-law, who was the owner of Queensland Maintenance Service, was Frank Zullo. This caused a concern of a familiarity threat, where Groves drew out funds from the UK-based account to complete a $22 million preferential payment. Observation and inspection processes by Green should have recognized debatable financial dealings in the quarterly reports and unlike particular operations. ABC Learning is a government-subsidized business, yet fraud was evident in its breakdown. The inability of Simon Green, former auditor, failed to produce inquiries to management, provide analytical procedures, and observe and inspect ABC Learning. To assess the collapse, 3 phases should be considered: risk assessment, risk response, and reporting. Ultimately, audit strategies should have been implemented better to assess these fraud threats.